Dogecoin. Geez, the price has come down. But what we want to do today is look at the psychology of the market from a macro picture, from an intermediate, and then a micro. It's going to give us a really clear opinion. Now, we're not fixed on our opinion, but based on the market and the price action, it can tell us of the mass psychology using Elliott Wave theory and Fibonacci, which is very, very high level. So if you like today's video, like, subscribe, hit the bell notification, help me get to 1,000 subscribers. I think we're on like 450 now, 450. So help me out. My name is Jagir, by the way. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. I've been trading the currency markets for around 15 years and I bring that knowledge and wisdom to crypto. I love crypto. I was featured in the best-selling book, High Probability Trading Strategies, back in 2008, just after I finished my math teaching career, believe it or not. So what we're going to do today is we're going to dive straight in. So we're always using Elliott Wave theory. So if you haven't taken my free crypto trading masterclass, it's in the link below. And one of the 3 secrets that I cover is Elliott Wave, just so you can learn the high level. So if you haven't taken it, it's free. So what we're going to do is dive into Dogecoin. So we're going to keep it really punchy today, really punchy. So I'm going to get up the text box. What we're going to look at is the macro. We're going to look at the intermediate, and we're going to look at the micro. And this is going to allow us to look at 3 degrees of counts, which allow us to really narrow in what's likely to occur next. So let's just start. First of all, let's just get up an arrow. And I want to get this really clear. So what's clear? Right, macro count, we have a nice move up and we've had a nice correction. That's what we call macro picture. So what we're going to do, we're going to label it. And this software only allows me to write the text on this count. So I'm going to write the text over here and keep it nice and clean, keep it nice and bold. Number one, size 40. Yes, here we go. Bang, nice wave 1. We're going to bring this down and it looks like we're coming towards a wave 2. All right, there we go. Nice and simple, right? We've got a nice opinion of the market now. It looks like we're on the wave 2 on a macro. So when we're looking at our notes, I want to make it nice and clear for you. We're saying wave 2. That's the macro picture. Right, wave 1, wave 2. All right, the next degree of counts is the intermediate. So we just go 1 degree down. What does that mean? Well, within Elliott Wave theory, what Ralph Nelson Elliott figured out back in the 1800s and the mid-1900s is that all markets mass psychology applies to the markets, and they break down into 5 wave structures and ABC structures. And within those 5 waves are a lesser degree of a wave. And so the information that we're looking at today applies on all markets and all time frames where there's people involved. And when there's people involved, psychology is involved. And we're measuring psychology. That's the exciting part here. So then we can have a strong opinion. Doesn't mean it's going to be right, but it gives us high probability. So what we're looking at here is this movement now. Let me just turn this up. This wave 1, wave 2, wave 3, wave 4, wave 5. That's what we call intermediate. And here it looks like we've got a bit of a complex correction, an A, B, C, D, E. That's the intermediate. So let's draw that out. Here we're going to go, boom. Let me just put this back on. We've got a 1, 2, 3, 4, 5 of a wave 1. And then if we then do, these sometimes are relatively common, not as common as an ABC zigzag, but here we've got a complex correction, looks like an A, B, C, D, and then what looks like an E forming, right? So what we're going to do is make sure this is on an intermediate count. Great, it is. This one we also want to make sure is on an intermediate count, so it's consistent in even the way it looks, right? And it's nice and clear over here. Boom, boom. All right, so where are we now on this count? Well, we're on the wave E of a wave 2. That's what it looks like. That's the opinion of the market right now, because there's really clear waves here, right? 1, 2, 3, 4, 5, and it looks like an A, B, C, D, E. So before, this looked like an A, B, C and a completion of a correction down here, and we're looking for long trade setups. But now that we've made a new low, hey, we have to reevaluate the market. And it's like, okay, it's a bit more complex. So the personality of Dogecoin is a bit more complex than anticipated. But you're involved. If you're buying and selling about Dogecoin, your psychology is involved in the mass psychology of planet Earth. So now we just update our notes. Well, let me update my notes. So we're saying a wave E of a wave 2, right? That's what that means when we write it like this. Wave E of a wave 2, right? I'm going to be, just to make it crystal clear, it means here's the wave 2 and here's the wave E. So we're saying we're on a wave E of a wave 2. So it gives us a really clear opinion of the market where we're at right now. So now what we're going to do, and before we dive into the micro, let's just look at the typical end of a wave 2, especially when it's like this. And we're going to look at some time retracements. Two main time retracements. It's not time retracement. Price retracements. Price. So let's look at this low. And in fact, I'm going to do it from here. But I'm measuring, just so you're clear, I'm measuring this low, and I'm going to take it from this high. But I'm going to do it from here because it just keeps the chart much cleaner. I like to keep my charts as clean as I can. So I'm going to make sure the price is in line with that low that we just pointed out. We're going to take this high up here, and we want the minimum typical retracement is 50%, then 62%, and then the typical maximum is 78.6%. We can see that the price has gone way past this 50%, so we can take that off. We've passed this 62%, like it just shot past us like it wasn't there. So it's likely that the price is going to get to the 78.6% retracement. But that by itself is not powerful enough. It's not strong enough for us to have confidence that that's where the end will be. But we can do some more detailed projection because we've got the intermediate count. We've got the wave E, this E here. This wave E here will also have a relationship with the wave C and a wave A. Typically, a wave E is the same length as the wave A, or very similar. Yeah, very similar. So what we do is we use this trend-based fib extension. We measure this wave A, and we're going to project it from this wave D forward. I'm going to project it from the wave D. But I'm going to do it slightly differently. I'm going to keep it in line with the wave E itself. It just keeps the chart again clean, and it's easier for me to see. So we're still measuring the wave A. I'm going to take off this magnet so it allows me to do it this way. I'm going to project it from this wave D high, boom. And then we're going to do the exact same thing again, but this time from this wave C. We're going to measure this high, but I'm going to do it again from up here. I'm going to measure this C low, and we're going to project it forward from this wave D high. I'm going to get rid of these because these are irrelevant, and get rid of this one as well. But now we have a cluster, right? A cluster, right? That's now saying that 78.6% is much more higher probability because now we've got 2 degrees. We've got the macro picture retracement from wave 1 to a wave 2, 78.6. And then we're looking at the intermediate count, measuring the wave A, projecting it forward from a wave D, measuring the wave C, projecting it forward from a wave D again. And we've got a cluster. Now we're going to do one more, which is the external retracement of the wave D itself, which will help us say what's the likely end of a wave E. And just so you're aware as well, we are using closing day data on a line chart. It just makes it easier for us to see what's likely to occur. This is the typical maximum, and you can tell the minimum is exceeded already. So it's 1.618 is a typical maximum. So now we can be confident, say actually Dogecoin looks like it might be reaching a low of a wave E of a wave 2. But now what we can do is we can jump into a lower degree time frame to see if this micro count, this count here of this wave E itself, does it break down to 5 waves? Typically it does. Typically a wave E, similar to a wave C and similar to a wave A, will break down to 5 waves because it's an impulsive wave as part of a correction. So now what we're going to do is, rather than trying to count on the daily chart, let's jump into a 4-hour chart. Let's just jump into a 4-hour chart. Let's just clean it up. The daily projections are already there. This is our wave D high. Let's keep it to a line chart so we're just consistent, so you know what we're talking about. And let's just see, is there an obvious count here to say a 1, 2, 3, 4, 5? Now, it's not that obvious, to be totally honest. We don't want to force a count for the sake of forcing a count because, could be a 1, could be a 1, could be a 1. It hasn't unfolded. But what is clear is that it's gone down, it's corrected a bit, and then it's made the second wave down again. So it's not that clear. We need some other information that's going to help us. This is not clear at all. We don't need to force a wave count for the sake of a wave count, because in comparison to the daily chart, this is really clean. Look at that, 1, 2, 3, 4, 5. And this now, in hindsight, A, B, C, D, E is really, really clean. But that one wasn't. So there's no real reason to put a micro count for the sake of a micro count. But what we can do to finish up is let's just go to a weekly chart and look at the momentum. Right? Now, there's not that much data with Doge, and we're only really taking it from here. But you can see that it went bullish and the market really moved up. It went bearish from this point here, and a couple of weeks later, it came down. And we can see that we're massively oversold now, where we haven't had a bullish reversal yet, but it's massively oversold. So on the weekly chart, we can we can conclude that the downside movement should be limited. And then you can see on the weekly chart, it doesn't actually pick up the 3 waves. It just kind of shows the 2 waves. But when we go on the lesser degree count on a smaller time frame, it's much cleaner to see. Now, some may argue that, you can say this is an A, B, C of an A, and then a B, and then a C. It doesn't matter too much because the retracement, the 78.6% retracement is in this zone. But let's pull up the indicator, right? What we want to look at is these lows. Let me just map these out for you. I'm going to point these out. This low, this major low, even this low, this wave, potential wave A. We want to see which one of the indicators picks it up quite smoothly. Now, this first one gets more of the intermediate move, so it's kind of a bit more choppy because it's catching all of these. This one tends to catch the more smoother ones, especially this one here. It marries up quite nicely. This one's a bit choppy in this region, but it's in that oversold zone. So this one's going to give us more information. I want to also just look at the slightly slower indicator, 21.1388. Let's just have a quick glance to see if this gives us. You can see that it catches it, but it's delayed by around quite a few days. And then I just want to look at the last one. Yeah. So the best one out of all of them was this one. That gives us the most valuable information because it marries up with this low. This low marries up quite nicely, even though it's a bit choppy here. This low, it wasn't really picked up apart from this. But what we're getting over here is it's coming close. I think, let me just double check. I'm checking this information on the left-hand side, by the way. These 2 blue numbers you'll see here, blue and red. I go to today's date and it says 4-4, which means they haven't crossed yet, but they're really close to crossing. So it just takes 1 day of up movement and the blue is probably going to cross the red. So we may be close at or near, very near the wave E of a wave 2 low. So if you wanted to go long on Dogecoin, wait for the bullish reversal, knowing that the weekly is oversold as well. It was oversold. Yeah, it was oversold. Yeah. And again, does that again give us any helpful information? Doesn't really. Like looking at this, I'm looking at it from a distance. There's no real count. Let me just pull up the candlesticks. Sometimes it's clearer with candlesticks on a 4-hour chart. Yeah, it's just not clear. I mean, we could kind of go 1, 2, it's a 3, 4, and then it's a final part of a wave 5. So it's not that clear, but if there was a count, it would be more like this: 1, 2, really a 3, 4, and then potentially coming down to a wave 5. And why I'm doing it now rather than before is because of the momentum indicators. It gives me clues to say, actually, yeah, that's the first move. It's come down quite nicely to this point. It's gone into a sideways move of more of an ABC correction of a wave 4, and then a downward move. So then we can actually do some projections on this now. So this is Dogecoin. So let's just do the most typical. The typical maximum is this 100%, which is right on that point. And that gives us a lot of valuable information. So that tells us now we've got a macro, intermediate, and micro degree of counts where they've got a price cluster on those counts. I'm going to do one last thing to wrap up. There's a bit of time analysis. I'm just going to do the basic time analysis. Now before, like even when we did the first one, a video a while back, I did this time analysis. Very simple. I took this low and I took this high and I said typical is going to be a minimum of 50%. What does that come in? So we can see it's now right up here. Now at the time I was like, geez, I don't know if it's going to take that long to correct. But look, where the date is the 26th of June would be 50%. So the absolute minimum is 38%, which we're past already, which is a good sign. The most common typical minimum of a correction is 50%. And then the typical maximum is 100%, which we don't need to put up into play. But let's just put this as a, I'm going to highlight that as blue. This one we don't need to have. So we're at this time retracement. Let's just get rid of these. Bump, bump, bump. And by the way, if you like today's video, do subscribe because I want to bring this value to you and help me get to 1,000 subscribers, and share this video. Anyone you know has got Dogecoin, now we've got a really strong opinion of what Dogecoin is doing. So rather than just kind of panicking on the selling, actually we might be coming to a local low, and if this low holds as a wave E of a wave 5 of a wave E of a wave 2, then what we anticipate next is this bullish movement. This bullish movement here. we should expect new highs to be made, right? And that's what we're anticipating. So do share this. But let's just now just do one last bit of time retracement. It's not a retracement, it's more of a extension. We've got the retracement here. This is valuable, but by itself is not that valuable. We want to now measure this wave, project it forward from here, measure this wave, project it forward from here, and let's see what we get. So the most common is a wave 1. So wave A projected forward. The most typical is 100, and then a maximum is 1.618. So we're way exceeded that. So that's we're way past that. So that's not that valuable to us. So we'll keep that. We don't need to keep that. Then we'll also measure this next one, which was here to here, and we'll want to keep the same too. And again, here's the 100%, which is more in this region, and the 1.618 is right close to this region here. So now we have a time of a retracement and an alternate time projection. We projected time forward into the past based on previous swings. There's a bit of other basic analysis we can do. Let's just do it actually. Let me do it for today. What we're going to do is this. This low, let me just get rid of this indicator so it's cleaner. Right, so we're looking at time. There's something called time rhythm zones. And most charts have a personality, and each market is different. Dogecoin is a market and it has a personality, and often a rhythm is formed. And we have a rhythm of this low. Let me just turn off this magnet. This low to this low to this low, we can project forward when the next likely low. Then there's another rhythm, which we've kind of projected already, which is this high to low, this high to low, this high to low, even this high to low. So we can go, there's a rhythm. So what we can do, just keep it simple, is we're going to measure this low to this low and project it forward from this low. You know, we might have to take consideration this low over here, because this is where time analysis becomes a bit subjective. You know, is this a significant enough low, or is this the last low? Now looking at it, is actually a significant enough low over here. So we want to project it forward from here. So what we can do is a very simple one. We're going to measure this low to low, project it forward from here. We're going to go from this low to this low, project it forward from over here. And lastly, we're going to go from this low. We have to make a choice between this one and this one. Are these two significant lows? Well, they are. So we want to measure both actually, this low to this low, and then this low to this low, both projected from this low. And then we're going to get a cluster, and that just gives us more confidence on when the next low is likely to be made. So we want to just measure, again, this low to this low, projected forward from this low, and the one that we want to pay attention to is only the 100%. I'm going to change the color of this so it's clear for you to see, because otherwise it gets a bit convoluted. Let's just choose purple for today. Purple for the low to lows, right? The next one we're going to do is we're going to measure this low to this low and project it forward from this low. Again, let's just keep it consistent here. So then we're going to measure this low to this low and project it forward from here. And then last but not least, we're going to measure this low to this low and project it forward from where it is. So now it just looks like a mess, right? It just looks like, whoa, just like a load of lines. But what we got is we can get rid of this one. What is this one? This is the one, because that's been surpassed already. But we've got a cluster. We've got a cluster of retracement, which was this 50%. We've got a cluster of alternate time projections, which is where we measure these high to lows and projected it forward from this high. And then we've got low to lows. And that's enough for us for now to go, okay, this is a very significant time zone and price zone. And we're going to look at two things. We got, this is high level stuff, by the way, guys. This is years of study that helps us get this narrow. So we go, the minimum we got was here and the maximum we got was here. So we've got this minimum time zone of 23rd of June, which is tomorrow, to the 30th of June. And then the next price is going to be here to here. And now if we just coincide that with the momentum, we get money. We got pattern, which is a wave. Did we write it out with the? Let me just double check. Where's the notes? Here's the notes. Here's the notes. The wave. We got a wave. A wave 5 of a wave E of a wave 2. Right. That's our opinion of the market right now. Right, so that's this part here, and then so that's our pattern. We've got price, right? We've got 3 degrees of counts with this price cluster, right? And even if we make sure, we won't do that now. But we've got price. Then we've got pattern price. We've got momentum, right? The weekly momentum is oversold and the daily momentum is oversold, deeply oversold. So there's three things. And now we've got time. So in the next bullish reversal, it might be a good opportunity to now buy Dogecoin. We might actually be at that low already. And on the candlestick, it tells us, we've had this big move down. We've got this particular candlestick. On the next bullish reversal, which we might already have. Yes, we have it right now. If we look at the numbers in the bottom left, it says 5 in the blue and then 4 in the red. So 5 is higher than 4. That confirms that the blue's crossed. So if the day closes like this, we could have seen the low of Dogecoin. So we're in this region. So there you have it. Any other information that I need to provide? Well, there's a summary. Macro, wave 2. Intermediate is a wave E of a wave 2. Micro is this wave 1, 2, 3, 4. What looks like a 5 of a wave E of a wave 2. Woo! That was good today. Today, Dogecoin, you have it all. If you like today's video, like, subscribe, hit the bell notification. I've got a quote for you today. Do help me get to 1,000 subscribers. If you enjoyed this video, subscribe. I think we're on 450, but I'm going to bring this value to you because no one else is doing this level of detailed analysis. Not for free anyway. Not that I've seen anyway. Right. We're going to stick with the richest man in Babylon, the words of wisdom. This book I bought when I was 23, 24, I think it was. And one of the old school pieces of wisdom from the richest man in Babylon is one of the lessons. We cannot afford to be without adequate protection. We're talking about insurance in the Babylonian era. We cannot afford to be without adequate protection. So in regards to that, in terms of trading or investing, it's risk management, it's stop losses. If you're not using stop losses, just buying the underlying token. When it does a 2x, 3x, 4x, depending on where you bought, if it's a low market cap, you want to be making sure you're taking your money off the table. So even if you do take a pullback, you already got your profits and you don't need to have all your money in the thing as well. So exit is really, really important and harder to do than entry for many people. So there you have it. Subscribe, like, hit the bell notification and share this video. See you soon.